Everybody, this is John, and welcome to the free video. It's actually Friday after the close, pretty quiet week, and not anticipating anything crazy on Monday, so just kind of want to get a jump start on this. So we're going to look at F5 here. So one of the questions that comes up is like, gosh, when you see a squeeze like this setting up, what's the best way to do a trade like this? And because what happens a lot of times, you see this like, wow, momentum's going, I'm going to buy some calls. And then for the next, in this case, 4 days, you just sit there kind of sucking wind, so to speak. And then finally, it jumps higher when the squeeze triggers. But in this case, depending on where you got these calls and depending on when they expire, you might have just barely got out by the skin of your teeth if you didn't get out there. So this is like, so that's an example there. And then it's also just kind of understanding where the levels are that we're looking at for when it does break out, right? So when it does break out, where is it going to go? And in this case, we can see that there's a clear move to the 1272 and the 1618 extension, okay? And it's funny because a lot of times all those deltas often line up, and you can actually sit there and structure this trade so you can benefit from it two ways, okay? And the two ways to benefit from it are, one, if it's trading sideways, you still make money, but if it goes higher, you make even more money. So one way to do this, of course, is that, oh, well, if you just sell a 1 standard deviation put spread, okay, well, if it trades sideways, you make money, and if it takes off, you make money, but you don't make more money if it takes off, right? Okay, and some parting thoughts as I end the video, and something to keep in mind is that we are on the edge, the verge of a huge shakeup in the markets. And what is driving this is what's going on in the US dollar. Okay, we've had a 12-year wedge pattern setting up here on multiple levels. And that wedge not only has, after 12 years, gone to the upside, which nobody was expecting, it's also powered by a squeeze, which, remember, lasts 8 to 10 months. The last one that lasted 8 to 10 months fired to the downside in 2002, and the US dollar went from 120 down to like where we are right now, 82. I mean, that's a huge drop. And if you remember during this time, what happened was gold exploded higher, oil exploded higher, stocks were going nuts. The dollar impacts everything. And I know everybody talks about the demise of the dollar and all that kind of stuff, which, hey, I was a history major. I studied the rise and fall of the Roman Empire, okay? At this point, the dollar is still king. The U.S. controls the sea lanes, and as long as they control the sea lanes, they control trade. Is that going to happen forever? Is it going to be like that forever? No, but they still got a couple more decades before that gets seriously challenged. What this means is that we're at a time that we have not seen in about 15 years where the U.S. dollar is going to wreak havoc on all major markets, okay? And with a squeeze signal in the dollar that I'm looking to last 8 to 10 months, I'm looking for a significant retracement of the US dollar, okay, up through 100. Now, you might ask, well, that's crazy, John. All the debt and everything and all the problems, all the fiscal problems that the U.S. is having, the US dollar is going to get crushed long term. Yes, the key with that is long term. But right now, the U.S. is in a better position than Europe, than Japan, okay? And what's also happening, what's even worse, is that the dollar going higher is also indicating that money from emerging markets is getting sucked out of that, okay? India, South Africa, Brazil, the list goes on and on. That's also going to push the dollar higher, and that's going to cause havoc in those economies, and it's going to cause volatility in the key markets. So crude oil, when the dollar popped up here in 2008, crude oil got destroyed. This move is going to be much bigger, okay? When the dollar popped up here, yen pulled back, but gold sold off, okay? This move in gold is going to be much bigger. Gold is going to have some huge moves to the downside, and if you know how to play this stuff using ETFs, you'll be fine. And I think that's one of the things, too, is like, I love gold, but gold's going lower. So does that mean you sell your bullion? I actually like having the physical stuff, but you want to know how to hedge it. So everything I just talked about there, I'm going to do a free video. My favorite way is to trade options on ETFs, and you can see a lot of this is going to be driven by the big moves in the US dollar and how that's going to impact that stuff. And we want to look at, which ETFs will get affected the most we're going to have, if the dollar is going higher, that's going to impact currencies, and that's going to impact commodities, and it's going to impact stocks and specific ETFs within the stock market, okay? There are going to be tons of opportunities. In fact, I think more opportunities over the next 8 months or so than we've seen in a long time. So we are going to look at diving into ETFs, why trading options on ETFs cuts your risk so you can sleep at night, how you can profit with ETFs from the unexpected move in the dollar, why you avoid games of high-frequency traders by playing ETFs. And this is actually kind of critical, especially commodity-based. Oil is what it is. High-frequency traders can't do much to that. Why most analysts have the next move in the dollar completely wrong. All the doom and gloom newsletters out there right now are talking about, gold going to 5,000. They're going to get destroyed. They got destroyed in 2008, and they're going to get destroyed again. How do you take the opposite side of those trades? We're going to talk about that because that's what's going to make the money in the short term. And then why are some of the markets that will be impacted by the dollars, or what are some of the markets that will be impacted by the dollar's next move? All right. So from here, if you guys have done this before, all you got to do is sign up. First name, your email address, click register now, and you'll be sent the information. And this is going to take place. There'll be a couple of them, but the first one is going to take place this upcoming Tuesday, 7 p.m. Central, which of course is 8 p.m. Eastern. And we'll actually, if it fills up, because it's very possible that this will fill up very quickly, you'll be given additional dates. All right, hope it helps. And there's the link, simpleroptions.com/ETF video. You guys have a great rest of the weekend, and we'll see you at the next update.